You paid your taxes last year. So did your neighbor. So did your coworker. You filled out the forms. You sent the money. You did what you were supposed to do. But the billionaire who owns 3 yachts, 2 private jets, and a mansion in Aspen, he paid less than you. Possibly nothing. Legally. And no, this isn't a conspiracy theory. The IRS knows. The government knows. The accountants know. The lawyers know. The lobbyists who wrote the rules absolutely know. The only people who don't know, the ones actually paying. That's you. That's most of us. And once you understand how this works, loophole by loophole, you will never look at the tax system the same way again, because the system isn't broken. It's working exactly as designed. The question is, designed for whom? Let's start with 3 words. Wall Street doesn't want trending on social media. Buy, borrow, die. 3 words, 3 steps. One of the most powerful tax avoidance strategies ever invented. And it is completely, entirely, 100% legal. Here's how it works. A billionaire buys stock in a company. They invest $1 million. Over the years, it grows. 20 million, 100 million, a gain of $99 million sitting in their portfolio. In America, you only pay taxes on an investment when you sell it. That's called capital gains tax. As long as you're holding the asset, not selling, the tax bill is 0. The money keeps growing. The billionaire keeps not paying. But they still need money to live, right? Private jets don't run on good vibes. So instead of selling and triggering that massive tax bill, they walk into a bank and borrow against the stock as collateral. A loan. And here is the beautiful, devastating part. Loans are not taxable income. The IRS cannot tax borrowed money. So the billionaire gets tens of millions in cash, spends it on whatever they want, and owes 0 tax on any of it. Then they die. When they die, their heirs inherit those assets at the current market value, not what the original owner paid. That original gain, the $99 million that was never taxed, is completely erased. Gone, as if it never existed. This is called the stepped-up basis, one of the most quietly destructive loopholes in the entire tax code. Generations of wealth transferred. Generations of taxes never paid. Buy, borrow, die. No income, no capital gains, no taxes. Repeat for generations. Now let's talk about real estate. Because this loophole has created more tax-free millionaires than almost anything else in the tax code. Imagine you own an apartment building. Tenants pay rent every month. The money flows in. You are making real documented profit. Sounds like taxable income, right? Not if you understand depreciation. The IRS says buildings wear down over time. The roof needs replacing. The pipes get old. The structure degrades. So the government lets real estate owners write off a portion of their property's value every single year as a paper loss. To account for that wear and tear, residential properties can be depreciated over 27.5 years. Every year, a fraction of that building's value becomes a deductible expense on paper, even if the property is increasing in value, even if you are making significant rental income, even if the building is in better condition than when you bought it. The paper loss is real for tax purposes, even when the actual loss isn't real at all. Real estate investors use this depreciation to cancel out their rental income entirely, sometimes even their salary. Donald Trump used this to pay almost nothing in federal income tax for years, hundreds of millions in paper losses, wiping out hundreds of millions in actual income. Not fraud, not illegal. The tax code working exactly as written, and available to anyone willing to buy enough property. This one is not just for billionaires. This is for the small business owner, the entrepreneur, the freelancer who built something real. When you run a business and pay yourself a salary, that salary gets hit from 2 directions: income tax and self-employment tax, Social Security and Medicare, which adds another 15% on top. An expensive combination. But there is a structure called an S-corporation that changes the equation entirely. You set up an S-Corp. Your business income flows through it. You pay yourself a modest, reasonable salary. The IRS requires it to be reasonable. but reasonable has a lot of flexibility in practice. The rest of your profit comes out as a distribution. And distributions are not subject to self-employment tax, so you only pay self-employment tax on the smaller salary. The rest flows to you at a significantly lower rate. Mitt Romney reportedly used this structure extensively at Bain Capital. The IRS knows. They have challenged it. Courts have upheld it. It is still completely legal. In 2017, the government created a program called Opportunity Zones. The idea was straightforward. Designate low-income communities as opportunity zones. Encourage investors to put capital there by offering major tax benefits. Investors defer or eliminate capital gains taxes. Communities get investment. Everyone benefits. That was the idea. Here is what actually happened. Investors parked their capital gains in opportunity zone funds. Billions in taxes were legally deferred or eliminated. If they held the investment long enough, some of those gains disappeared entirely. And the investments that flowed into these zones? Luxury apartments, high-end hotels, storage facilities, real estate catering to wealthy newcomers rather than existing residents. The low-income communities that gave the program its name and its political justification largely saw their rents rise and their long-term residents priced out. Legal, widely used, promoted by both parties, and extraordinarily quiet about its actual outcomes. Want to go to the extreme end of what is legally possible? Move to Puerto Rico. Under Puerto Rico's Act 60, residents who qualify get access to a tax structure most Americans would consider impossible. Capital gains from investments made after you establish residency? 0%. Not reduced. Not deferred. 0. Dividend income? 0%. Business income for qualifying services? Potentially as low as 4%. These are not estimates. These are actual statutory rates. And because Puerto Rico is a U.S. territory, residents are still subject to some U.S. taxes. But federal capital gains tax does not apply to Puerto Rico-sourced gains after residency is established. Thousands of wealthy Americans have made this move. Crypto investors with massive gains, hedge fund managers, tech entrepreneurs. They establish genuine residency, which requires actually living there for at least half the year, and legally opt out of federal capital gains tax entirely. Some post content about the beach. What they talk about less is the tax bill they are no longer paying. It is technically still America. You just have to actually live there. And for someone with hundreds of millions in unrealized gains, the math is very straightforward. The thing nobody tells you at the end of videos like this: everything you just watched is legal. Not legal in a gray area way. Fully, explicitly, clearly legal. Every strategy in this video was either deliberately written into the tax code, shaped by decades of lobbying, or upheld by courts that interpreted existing law in ways that benefited those who could afford to challenge it. Whether these strategies do what their defenders claim, stimulate investment, create jobs, develop communities, that is a genuine debate. Economists sit on both sides. But here is what is not debatable. These strategies are not available equally. They require capital. They require lawyers and accountants who specialize in structures most people have never heard of. They require the ability to plan across generations. The person earning $60,000 a year is paying their marginal rate. Every dollar. Every year. And the next time someone tells you the wealthy simply work harder, remember this video. Because sometimes it is not about working harder. It is about playing a different game, with different rules. Rules that were written with very specific people in mind, and it was not you. If this changed the way you see money, taxes, and the systems running quietly underneath everything, subscribe to the Hidden Ledger. We find the hidden financial forces shaping the world most people take for granted, and we break them down clearly, one video at a time.